Imagine the global economy is a dinner table where one person always eats first. For 80 years, that person was the United States dollar. Everyone else, Europe, Asia, the global south, had to wait for the leftovers. But tonight, the rules have changed. The other guests have stopped waiting. They are looking at the head of the table, and under the tablecloth, they are sharpening their knives. But these aren't steel knives. They are made of gold, oil, and microchips. We are witnessing a brutal rebellion. Nations are dumping American debt and building new alliances to escape the dollar's control. This isn't just a political disagreement. This is a war for legacy the desperate need to be number one. And when the giants at the table start fighting, the plates get smashed. Those plates are your savings. Today, FinGraphy exposes the scramble for the throne. Ladies and gentlemen, to understand the violence of this moment, we have to travel back in time. The year is 1944. The world is in ruins. The Second World War is raging. But in a quiet hotel in Bretton Woods, New Hampshire, a group of men are designing the future. They decide that the United States dollar will be the sun, and every other currency will be a planet orbiting around it. For decades, this system worked. It brought stability. It allowed global trade to flourish. But systems, like people, have a lifespan. And right now, the Bretton Woods system is on its deathbed. You can feel it in the air. The giant that has sat on the throne for nearly a century is tired. Its breathing is labored. Its grip on the scepter is shaking. And around the room, the challengers smell blood. This is what we call the vacuum of power. When a hegemon begins to fade, it does not leave a polite vacancy. It creates a black hole of chaos. And into this black hole, every ambitious nation is rushing to fill the void. This brings us to the core psychological driver of this entire conflict. It is not just about money. If you read the work of Roy Garn on emotional triggers, specifically the trigger of reputation or legacy, you begin to see the hidden engine of history. Nations are collective egos. Leaders are terrified of being the ones who let the empire fall. This fear drives them to make irrational, dangerous decisions. Why does a country invade its neighbor even when it destroys its own economy? Reputation. Why does a central bank print trillions of dollars, risking hyperinflation? Reputation. They are buying time. They are trying to purchase one more day of looking like the king. But the audience, the market is no longer clapping. The trust is gone. And when trust leaves the room, panic enters. Today, we are going to take a deep, uncomfortable look at this scramble. We are going to analyze the pretenders to the throne, the digital insurgents, and the new alliances that are drawing lines in the sand. Most importantly, we are going to show you where to stand so that when the throne finally collapses, it does not land on you. Let us move to our first group of challengers. In any Game of Thrones, there are always the noble families who believe they are next in line. In the financial world, these are the euro and the Japanese yen. For decades, investors looked at these currencies as the logical alternatives to the dollar. They were the Prince Charles of the monetary system, waiting in the wings, assumed to be ready. But now that the moment has arrived, we discover that the princes are sick. Consider the euro. On the surface, it looks magnificent. It represents a massive economic zone, rich in culture, industry, and history. But if you peel back the layers, you see a Frankenstein monster. The euro is a currency stitched together from 20 different nations, each with its own language, its own culture, and most fatally, its own economic needs. Imagine a marriage between a strict, disciplined saver and a wild, free-spending gambler. Germany is the saver. They remember the hyperinflation of the 1920s, where a wheelbarrow of cash couldn't buy a loaf of bread. This trauma is in their DNA. They want tight money, high interest rates, and fiscal discipline. On the other side, you have the southern economies, Italy, Greece, Spain. They rely on tourism, exports, and often government spending to keep their populations happy. They need loose money and low rates. In the past, these countries could just print their own distinct currencies to solve their problems. But the euro is a golden straitjacket. When a crisis hits, Germany shouts save, and Italy shouts spend. And the European Central Bank is paralyzed in the middle. In a scramble for global legacy, you need speed. You need a unified will. The euro has neither. It is a committee trying to fight a war. And committees do not win wars. The reputation trigger here is tragic. European leaders are so obsessed with the idea of a united Europe that they are willing to sacrifice the prosperity of their people to keep the currency alive, even as it stagnates. Then we turn our eyes to the east, to Japan and the yen. Japan was once the future. In the 1980s, people thought Tokyo would buy New York. But today, Japan is the world's retirement home. They have the oldest population on the planet. And to support this aging society, the Bank of Japan has engaged in the most reckless monetary experiment in human history. For decades, they kept interest rates at zero or even negative. But recently, the dam broke. They were forced to raise rates to save the yen, and now they face a nightmare. The interest payments on their massive debt are eating the budget alive. They have become the whale that ate the ocean. Now, Japan is trapped. If they raise rates further, they bankrupt the government. If they stop, the yen crashes and burns. It is a kamikaze monetary policy. The leaders in Tokyo are driven by the legacy of stability. They cannot admit that the last 3 decades of policy were a mistake. So they double down, they intervene, they fight the market. But the market is bigger than any central bank. The yen, once a safe haven, is becoming a trapdoor. And investors are starting to realize that the old safe havens are actually ground zero for the next crisis. So, if the old guard Europe and Japan are too weak to take the throne, who is left? If the lieutenants are dying, perhaps the threat comes from the outside. Perhaps the next king is not a country at all. This brings us to the most fascinating twist in our story, the emergence of the digital wildcard. While the old empires fight over borders and treaties, a new front has opened in cyberspace. This is a battle between two visions of the future, the vision of absolute freedom and the vision of absolute control. In the corner of freedom, we have Bitcoin and decentralized assets. You have to understand what Bitcoin actually represents in this scramble. It is not just a speculative token you trade on your phone. It is a philosophical protest. It is the only asset in the world that has no CEO, no marketing department, and no central bank. It has a hard cap of 21 million units. No politician can wake up in the morning and decide to print more Bitcoin to fund a war or buy votes. For the first time in history, humanity has a way to store value that is completely independent of the reputation and whims of national leaders. It is truth in the form of code. In a world where every government is debasing their currency to service their debts, Bitcoin acts as a chaotic alarm system. It screams the truth that the officials are trying to hide. This is why they hate it. It undermines their monopoly on value. But the empire strikes back, and their weapon is the central bank digital currency, or CBDC. Do not let the similar name fool you. CBDCs are the exact opposite of Bitcoin. They are the ultimate tool of surveillance and control. Imagine a dollar that is not a physical object in your wallet, but a line of code on a government server. With physical cash, you have privacy. If you buy a coffee, or a book, or give $20 to your nephew, nobody knows. It is a peer-to-peer transaction, but with a CBDC, the central bank sits in the middle of every single transaction. They can see what you buy, where you buy it, and who you are with. But it gets darker. Because this money is programmable, they can control how you use it. Imagine a scenario where the economy is slowing down, and the government wants you to spend money to stimulate growth. They could program your digital dollars to have an expiration date. Spend this by Friday, or it disappears. Or imagine you want to buy a flight to a foreign country, but the government decides you have already exceeded your carbon footprint allowance for the month. Transaction declined. This is not science fiction. This technology is being built and tested right now in China, in Europe, and in the United States. This is the digital scramble. It is a race to build the rails of the future financial system. China is winning this race with the digital yuan, hoping to bypass the Western banking system entirely. If they can get half the world to use their digital network, they can shut the United States out of the room. They can turn off the lights in the West. This drives the Western leaders crazy. The fear of losing technological superiority, the reputation trigger, again, is pushing them to rush their own digital currencies, potentially sacrificing the privacy rights of their own citizens just to stay in the game. While the digital world fights over code, the physical world is fighting over commodities. We are witnessing the most significant realignment of global alliances since the fall of the Berlin Wall. For decades, The global economy was a hub-and-spoke system. All roads led to New York and London. If Brazil wanted to trade coffee with China, they often had to transact in dollars, clearing through American banks. But the scramble for legacy has shattered this simplicity. Enter the bloc known as the BRICS: Brazil, Russia, India, China, and South Africa. And now, they are expanding to include major energy powers like Saudi Arabia, Iran, and the United Arab Emirates. Look at a map. These countries control the majority of the world's oil, the majority of the world's wheat, and the majority of the rare earth metals needed for every smartphone and electric car on the planet. This is the revenge of the real. These nations are tired of trading their valuable resources for Western paper currency that is being inflated away. They are looking at the United States dollar and asking, why should we price our oil in your currency when you can print it from thin air, but we have to drill it from the ground? We are seeing the formation of a commodity curtain. On one side, the G7 nations rich in dollars but poor in resources. On the other side, the BRICS rich in resources but hungry for respect. They are building a parallel system. We see Russia and China trading in rubles and yuan. We see Saudi Arabia accepting currency other than the dollar for oil, something that was considered a red line for 50 years. This is not just trade. This is a geopolitical divorce. And like any divorce, it is expensive and messy. The global supply chains that made goods cheap for the last 30 years are breaking. Efficiency is being replaced by resilience, and resilience is just a fancy word for more expensive. The era of cheap goods is over because the political trust that allowed for cheap goods has evaporated. The scramble for legacy has forced nations to prioritize security over economy. They would rather pay more to trade with a friend than pay less to trade with an enemy. And this leads us to the most dangerous question of all. When an empire is backed into a corner, when its currency is rejected and its alliances are fraying, how does it react? Does it step down gracefully? Or does it lash out? To answer that, we have to look into the dark mirror of human psychology. To truly understand why world leaders are willing to risk economic suicide to win this race, we have to put down the calculator and pick up the psychology textbook. Specifically, we must revisit the concept of the reputation trigger. In the world of geopolitics, face is everything. For a superpower, the perception of power is just as important as power itself. If the world believes you are strong, they buy your bonds, they use your currency, and they sign your treaties. But if they suspect you are weak, the sharks begin to circle. This creates a dangerous psychological trap known as the gambler's ruin. Imagine a gambler at a casino who has lost a significant amount of money. A rational person would walk away, but the gambler is driven by the reputation trigger. He cannot bear the shame of walking away a loser. He wants to reclaim his status. So, what does he do? He bets more. He borrows money. He takes bigger and bigger risks, hoping for that one big win that will fix everything. We are seeing this exact behavior in global capitals today. The United States and Europe act like the gambler who refuses to leave the table. They use sanctions aggressively, weaponizing the financial system to punish dissenters. On paper, this looks like strength, but in reality, it is a sign of insecurity. Every time you weaponize the dollar, you force neutral nations to ask themselves, what if I am next? This accelerates the very thing the West is trying to prevent. It pushes countries like Brazil, Indonesia, and Saudi Arabia to build their own alternative payment systems. Not because they hate the West, but because they need insurance. They are diversifying their risk. On the other side of the table, the rising powers like China are also trapped by their own reputation needs. They are obsessed with correcting the century of humiliation. They pour billions into infrastructure projects in Africa and South America, often projects that make no economic sense, just to plant their flag and buy loyalty. They are buying prestige. This is why the scramble is so volatile. It is not a chess game played by cold, rational machines. It is a poker game played by emotional, fearful humans who are terrified of losing their legacy. And when fear drives the car, accidents happen. History is a relentless teacher, but unfortunately, its pupils rarely pay attention. If we look back at the last 500 years, we see a terrifying pattern. Every time a global reserve currency collapses, it follows the same script. Let us look at the British Empire in 1956. This is the moment the sun finally set on the British pound. Britain, trying to maintain its imperial reputation, invaded Egypt to seize the Suez Canal. They thought they could still act like the masters of the world, but they were broke. They were drowning in war debt. The United States, the new rising power, simply looked at Britain and said, "Stop, or we will crash your currency." America threatened to sell off all its holdings of British pounds. The British government realized they had no clothes. They withdrew in humiliation. The pound collapsed, and the dollar became the undisputed king. Go back further to the Spanish Empire in the 16th century. They discovered mountains of gold and silver in the New World. They thought they were rich. But instead of investing that wealth in industry or education, they used it to fight endless wars for religious reputation and glory across Europe. What happened? The massive influx of gold caused hyperinflation. The cost of living skyrocketed. The Spanish economy hollowed out, and the empire crumbled under the weight of its own gold. Do you see the parallel? Today, we are not finding gold in the ground. We are printing digital gold at the central banks. The United States is currently spending more on the interest payments for its national debt than it spends on its entire defense budget. Let that sink in for a moment. The cost of the past is eating the budget for the future. This is the cost of legacy. To maintain the illusion of being the sole superpower, the government must print money to fund the military, fund the social programs, and fund the bureaucracy. This printing press acts as an invisible tax collector. It visits your house every night while you sleep. It unlocks your safe, and it shaves a sliver of value off every dollar you own. You wake up with the same amount of money, but you can buy less food, less fuel, and less freedom. This is how empires die. Not with a bang, but with the whimper of devaluation. So, we have established the battlefield. The giants are fighting. The currency is being debased. The world is fractured. The question you are screaming at your screen right now is likely, what do I do? How do I protect my family? First, you must understand that the old playbook is dead. For 40 years, the standard advice was the 60-40 portfolio. 60% stocks, 40% bonds. This strategy relied on a stable world order and low inflation. Those days are gone. In a world where governments are actively destroying the value of their currency to save their reputation, holding government bonds is like holding a melting ice cube. You need a new strategy. We call it the barbell strategy. Imagine a weightlifting bar. You want your assets on the two extreme ends, avoiding the middle. On the one end, you want chaos insurance. These are hard assets that no politician can print. Gold, silver, agricultural land, energy commodities. These assets have survived the collapse of Rome, the collapse of the Spanish Empire, and the collapse of the British pound. They are the bedrock. When trust in paper money evaporates, money flees to these historic safe havens. On the other end of the bar, you want hyper-innovation. If the old system is breaking, you want to own a piece of the new system. This means investing in high-quality technology companies that are building the future artificial intelligence, robotics, and cybersecurity. It also means, for those with the stomach for it, an allocation to blue-chip cryptocurrencies like Bitcoin. Why? Because as we discussed, Bitcoin is the only asset that exists outside the control of any government. It is a bet on the separation of money and state. What you must avoid is the mushy middle. This includes cash savings in a bank that pays you pennies while real inflation continues to erode your purchasing power every single day. It includes zombie companies that rely on cheap debt to survive. In the Great Scramble, the middle ground is the kill zone. But the most important asset you can cultivate is not in your brokerage account, it is your mindset. You must master your own emotional triggers. When you see a scary headline about war, your instinct will be fear. You will want to sell everything. When you see a massive rally in a speculative asset, your instinct will be greed, the desire for instant status. You must resist both. The investor who wins in this decade is the one who can detach their emotions from the news cycle. They are the ones who watch the giants fight and say, interesting, not help me. As we step back and look at the global chessboard, one thing becomes crystal clear. The era of the single king is over. We are not moving from a defined American century to a defined Chinese century. We are moving into an era of fragments, a mosaic of power. The United States will remain a formidable power, likely the strongest for a long time, but it will no longer be the only voice that matters. The Eurozone will struggle to keep its family together. The Global South will rise, demanding a seat at the table, trading oil for gold and data for influence. And the digital realm will continue to grow, building a parallel economy that operates outside the walls of the old castles. The scramble for legacy is a dangerous time. It is a time when the pride of leaders can lead to the ruin of nations. It is a time when the maps are redrawn and the rules are rewritten. But remember this, chaos is a ladder. For those who are informed, for those who understand the macro currents and the psychological drivers we discussed today, this is the greatest opportunity of our lifetimes. The dinner table is being rearranged. The knives are out, but you do not have to be on the menu. You can be the one who sees the change coming and sets your own table. The throne is empty, the crown is melting, and the race to forge a new one has just begun. The only question left is, will you be a casualty of the old world or an architect of the new one? This is FinGraphy. We don't just read the news, we read the history being written in real time. If you want to survive the scramble, make sure you are subscribed. We will see you on the other side.